And once people recognize that, there's so much capital, it's got to rotate. And you've got a market like Bitcoin, which is roughly like 1/10 the size of the gold market. And you got the silver market, which is comparable to the Bitcoin market. And people, the short-term money, not the central banks, but the short-term money is going to start to say, okay, where do I go now? And I think what they're going to do is they're going to find Bitcoin is where you want to be, because we've got stocks at relatively high valuations. We've already had a strong rally in bonds. We've got gold and silver on just historical runs and now consolidating. So what's the asset class that's left to absorb that marginal dollar of capital?
He points out that Bitcoin's long-term price channels remain intact, and we're currently at the lower bound, suggesting asymmetrical upside. The upper channel, he notes, still projects 140K, 150K within months.
I think it's starting this week. I think in the medium to longer term, let's call it 3 to 6 months, I'm very confident, high level of probability that this is beginning now. Do I think there's always a potential? One more little flush out, shake out some weak hands, a little dip in the Bitcoin price, maybe all the way to the 98 level is possible. If it happens, I think it's 1-2 days back to 108, and then we're on our way to 140, 150 by the end of January. And to flesh out what I see happening here really is people need to just take a step back and really look at where we were just a year ago, right? So a year ago, before the election, the Bitcoin price somewhere in the 50s, okay? And literally in the 3 months after the election, it went up over 50% and gold went up 2%. So it shouldn't be surprising to people that after a move like that, basically from 50s to 108, that we were going to spend some time, consolidating, shaking out weak hands, making sure these price levels make sense. And I think right now we're at a key price level, which is that 108 level. This was that first breakout high that we got to at the end of last year and in January. And so we're just confirming that's where we want to be. Could we do a quick slip? 98 was something we hit around the time the United States bombed Iran, check down to that level for a day or two and then come right back up, sure. But when you look at the longer term price channels, we are right now in the lower bands of those channels, and the upper bands, like I say, are pointing to 140, 150 by the end of January.
Now,
so there are times when gold and Bitcoin can trade together, and there are times when they don't. When you see a big divergence, and that's what we've seen in this rolling 60-day moving average of the Bitcoin gold correlation, basically get to zero. And so that's a time when, and there are some other key indicators as well, such as the gold to Bitcoin ratio, which right now got down to a low that it bounced from in the past, which was around 26 ounces of gold to 1 Bitcoin. And so we're seeing, whether it's in like these more technical oscillators and RSI divergences and these correlation metrics, the ratio, we're just seeing us get to levels that historically have pointed to a time to flip, a time to turn. And any one of these in isolation might not be enough to say, okay, this is the time I think this is going to happen. But when you start putting them all together, and then you add on top of that what I would just call good old common sense, right? I mean, this gold move has been incredible. And to go from roughly 3,600 just 2-3 months ago to 4,300 is just a massive move. And we had a massive move, not quite this big, but a very big move, earlier this year in the spring. And we moved very quickly to 3509 is what we hit on the futures. And once we kind of topped out, we never crashed. So I'm not predicting a gold price crash or that the gold move is over. It's just what we saw gold retreat back to the 20-day moving average, and guess exactly where we've stopped last night and today on gold, the 20-day moving average, which is around 4,000 on the gold price, 420 on futures. And what happened last time was we hung around the 20-day for a couple days. We kind of bounced from it. We tried to get to another new high, but we just couldn't. And over that time, which was a 2-3 week period, the 50-day average moved up and eventually gold touched the 50-day. And then it just bounced around for the next 3-4 months, in like a $200-$300 range. And then as the 100-day moving average started moving up to the gold price, we really got another breakout. And I think that pattern is likely to repeat, and that for this cycle, we've probably seen the high. And once people recognize that, there's so much capital, it's got to rotate. And you've got a market like Bitcoin, which is roughly like 1/10 the size of the gold market. And you got the silver market, which is comparable to the Bitcoin market. And people, the short-term money, not the central banks, but the short-term money is going to start to say, okay, where do I go now? And I think what they're going to do is they're going to find Bitcoin is where you want to be, because we've got stocks at relatively high valuations. We've already had a strong rally in bonds. We've got gold and silver on just historical runs and now consolidating. So what's the asset class that's left to absorb that marginal dollar of capital? I think it's going to be Bitcoin. And I think even if we do, as I say, get a quick shakeout down to that 98 level, I think it's just going to be like a dipping the toe in the water and come right back out. And then we're going to start moving back. And when I look at my trend work and my channels on Bitcoin, I do think, and 150 has been my call by the end of the year on Bitcoin. It's possible, but I'm now thinking that while 150 is where we're heading, it might not hit that until the end of January, but still, we're talking about 3-4 months away.
That process, while beneficial long-term, tends to suppress price momentum in the short term. It's the hidden reason why Bitcoin has seemed stuck, despite a perfect macro backdrop. A dovish Fed, rising gold, and growing inflation concerns.
And I think that goes a long way to actually explaining why they're not trading in tandem, even though, as I say, they're riding that same macro wave, the debasement trade, whatever you want to call it. Because, on the one hand with gold, you've got the central banks, very sticky, programmatic buying, kind of price insensitive. And then on the Bitcoin side, I think what's really kept the price in is, just some of the whales, the OGs saying, hey, the 4-year cycle thing, we've gotten to a level that is very high. And plus Bitcoin now has the liquidity that I can go in and I can sell 100, I can sell 1,000 coins and, cash out some of this at some point in time. And that's just being worked through. And I think that's really what we've been doing this summer, is we've been working through, which is what you want to see for Bitcoin's long-term health and growth. You want to see the coins start to get spread out. You want to see it go from a few whales that unleash thousands of coins, and it starts going into, whether it's directly being held, whether it's going into IBIT and getting into a 1-2% allocation into people's portfolios. And we're seeing that dissemination of this fixed supply going out into the market, into other hands. And that's ultimately a good thing. But in the short term, it has kept, I believe, a lid on the prices this summer, even though those broad macro trends would make you think, hey, this is exactly the environment, Fed getting ready to cut, debasement trade, all the rage, gold moving. This should be a perfect environment for Bitcoin. I think it's that but that base of who holds the coins, who's selling it when. And now we're starting to move into that next phase where I think what we're going to see is we're going to start to see more institutional adoption, this acceptance. The Clarity Act is, I think, going to be some piece of news. We haven't heard a lot about it. The Sovereign Wealth Fund. So these are things that I think the internals, the market dynamics, the market structure of Bitcoin are saying, hey, we want to go higher. We need that catalyst to really send it. And it doesn't take much. Just like when the stock market was going up every day, it didn't take much for a 3.5% drop in the NASDAQ, one Trump tweet, and it happened because it was like a coiled spring. It just kept going up, up, up. Everybody's like, we need an excuse to sell and take profits. They got that excuse. There it goes. I think everybody's looking at Bitcoin, seeing the things that we're seeing, saying, hey, this thing's kind of like consolidated, coiled spring, ready to go to the next level. They're waiting for that catalyst. When does that come? that's very tough to tell. And that's why what I do is I look at the charts and I say to myself, look, I don't have a perfect crystal ball, but this 108 level is a key level. It's where we broke out to in the winter. And could we drop a little bit lower? Sure, we could. But after being at 126, 127 on futures and dropping all the way to 103, I mean, I think that's when you have to start moving in. I started moving in last week. I moved in more this week. I still have about a third of what I want to allocate for my short-term bull move that I'm holding in reserve in case we get that quick dip down. But I mean, as far as, how confident I feel, like I feel as good as I have pretty much all year, with the exception of maybe April when Bitcoin was in the 70s. That this is a time where you're going to see very nice returns over the next, let's call it 4 to 8 months. Definitely. I think this is one of the undercurrents that we're seeing happen right now. We're seeing a bit of an internal rotation in the markets. We're seeing some of the larger mega caps actually do fairly well. Some of them have really not done much. If you look at a Microsoft or an Amazon, even in NVIDIA, has basically, these have been range trades. And I think part of the reason why is that back in the spring, not only did we have the tariff uncertainty that spooked investors, but we had that dollar move from roughly 110 very quickly down below 100. Basically it called a 10, 12% quick decline in the dollar. And foreign investors, they were looking at this and saying, they were really hurt. Like if you were a U.S. investor and you saw the S&P go down 20%, well, if you were a foreign investor in the S&P, you saw it go down 30, right? Because you add on that 10% dollar move. So you got a third of your capital wiped out in a matter of weeks if you were a foreign investor, home currencies, in the euro, for example. So basically, I think the dollar has now stabilized. We've seen this range between 96 and 100 on the DXY. We've also seen kind of treasuries, kind of get a little bit tamer. In fact, below 4 was not something people were talking about as recently as a month or 6 weeks ago when everybody was freaking out because the 30-year hit 5%. So I think what that's doing is that's sending the signal to foreign investors that missed out on this big rally because they were afraid to allocate in, say, May or June because they didn't think it was over. They thought we were going to retest. They were worried about currency. And they've been waiting for a dip. And I think, honestly, we probably should have dipped more than we have. We haven't even gone, I don't think, much more, if at all, more than 3% down on the S&P from highs. And I think we probably should have had a 5 to 7% correction. But what we're seeing, I believe, is and we'll see this eventually when the Fed releases foreign holders of equity data, but we're seeing foreign investors come in. They're buying the big names. I think there's 4 big events out there that we need to get over. We need to get mega cap earnings, the Fed meeting and CPI over, the government shutdown over, and the Xi-Trump summit over. And all of those are coming to fruition in the next, let's call it 3 weeks. And that by the time we get into November 7th is a Friday. The week after that is the Tesla shareholder meeting on the 10th, I believe. There's a lot of catalysts that I think people are buying some of this dip now. And then they're also, some of these big institutions are saying, let's get over those events, and then we're really going to come in. And so again, that's what I think is going to set up the animal spirits, the risk sentiment in the end of the year. Who's going to be that marginal buyer? Retail has been in the market. Now we're going to start getting some of these institutions, especially foreign institutions, I think, piling in at the end of the year. U.S. portfolio managers playing catch up. And so I think November and December look great. And October as a shaky month is not a surprise to me, and actually healthy for the longer term bull market in equities, stocks, and gold.
Gold has had its moment. Stocks are steady but extended. Bonds have rallied. The dollar has stabilized. And now, as the global market prepares for its next wave of optimism and liquidity, Bitcoin stands in a unique position. Smaller, faster, and hungrier for capital. For Mattison, the narrative is clear. Bitcoin is not merely reacting to macro events. It's becoming the asset that absorbs the next wave of global liquidity.